crude oil falling to an 8-week low today as a bigger than forecast gain in jobless claims bolstered concern the economy will be slow to recover. Joining us on the phone from Villanova to discuss the move in oil is Stephen Schork, author of the Schork Report and president of the Schork Group. Stephen, welcome back to Bloomberg's Bottom Line. Always good to have you on.
It's great to be here, Mark. Thank you.
Stephen, let's go a little bit more into depth here. This jobless claims that we heard, exactly how is that affecting the oil picture today?
Well, I tell you what, Mark, we came in all bulled up. That is, Wall Street came bulled up with the notion that $100 crude oil was a done deal. The bottom line is, though, the forecast for $100 was always based on shaky ground. We know from past history, once you get above $100, Mark, remember, this nets back to about $3.30 at the pump. That's when you see demand inelasticity begin to wane. So when we get a report like today's showing that the jobless claims are much greater than people thought, it just brings home the fact that, you know what, a lot of people simply can't afford $3 gas, let alone $3.30,
right.
And therefore $100, it's a tough sell. And, Mark, it shows you how weak the bulls are. All it took was last weekend for the Saudi oil ministers to say that they might put more barrels onto the market, and the market has sold off almost $8 right now. So there's not a lot of strength behind this. There's a lot of hot air with the notion of $100.
Stephen, you made the meteorological comparison, so I'll continue with that. A lot more snow here today in the northeastern U.S., particularly here in New York City. Is there enough gas on hand, at least right now, across the country for these final couple of months of winter?
Oh, absolutely. And, you know, you think about it. How many people were driving today? Not many. So these storms actually, it's demand destruction. And you know what? That's demand that's never coming back. So we saw the numbers that came out from the DOE, the weekly inventory report yesterday. And, yes, the bottom line is there is plenty of supply. And given the structure of the forward curve in oil prices, we are virtually guaranteed that oil is going to continue to come to the United States because it just pays you to put barrels into storage.
Well, the Northeast is the largest user of home heating oil. How is this winter weather going to affect that? What should consumers be watching for?
Well, right now, I think a lot of them have had their prices locked in. Demand has been, no surprise here, has been very strong. The cash market, the spot market, the actual, I talked to the heating oil dealers and what they're paying at the rack. They're actually paying more at the rack than they are for the future price being traded on the NYMEX. So demand is stout. And in fact, over the next 2 weeks is when we tend to see the coldest weather and the highest demand. So prices are going to remain, demand's going to remain real strong for the next couple of weeks.
Right.
But you know what? We have time decay now. If you're bullish on the weather, you can only be bullish for about another week or so, and then we start to think about the spring and mild weather.
Stephen, I wanted to go overseas for a moment, if we might, because I was reading something on my Bloomberg today that Russian Urals rebounded this after Latasco, OAO, Lukoil's trading unit, bought a shipment at a higher price. What are the consequences of that?
It certainly, and what we're seeing, and it's just indicative of, you know, demand here in the United States is relatively weak, but it is picking up. And so we're probably putting a floor into oil prices right down here in the mid-$80 range, because what we're seeing now in the Brent market, which trades, the futures market, which trades over in London, the Brent market is a much stronger market. We're talking, it's trading at about $11, $12 premium to NYMEX WTI right now. So we're talking oil being traded on a global scale that's still being priced in the mid-$90 range.
But, Stephen, the Brent crude trading below the 40s grade for the first time here in about 10 months.
This is true. What you had, Mark, about a couple of weeks ago, you had the cash Brent market trade at a very steep premium to the futures market. So what you're seeing is a lot of Brent that has, in one particular trading company, bought a significant amount, and now they're unloading that oil into a very high market, and they're locking in profits right now.
All right, Stephen Schork, president of the Schork Group, joining us on the phone from Villanova, Pennsylvania. Stephen, always good to have you on. Thanks so much.
It's great to be here, Mark. Thank you.